We spent almost 3 hours in European session today, and right now we are on USD JPY daily time frame, and there is an interesting setup here on daily time frame, which is a butterfly under formation. When I say under formation, I mean to say that this has not been completed yet, and some part of formation is still remaining. So where is the completion point? So if you want to draw the butterfly, this will be your point X, this will be A, this will be B, this will be C, and this will be D. And 127.2% extension to the downside of this XA upswing is here, right here, 127.2. So I will just use crosshair and I will just show you where exactly is the completion point. So this is 139.561. However, price may or may not go to 139.561, and it may return back to the upside and at least do an upward retracement. I'm not saying that it probably will do a big reversal to the upside, but upward retracement is expected. And the two reasons why I'd say that it may or may not go to 139.561 are these. Number one is regular bearish divergence, regular bullish divergence. For example, if you see this swing low, which is aligning with this low of RSI, and then you see this swing low, which is aligning here with the RSI. But right now price has made lower low, but RSI did not make lower low, which is making a setup of regular bullish divergence. In simpler terms, it says that the speed of the fall of this particular currency pair is slowing down, and that's why there may be initiation of any uh, bullish movement. And another reason is, let's go to the weekly time frame to understand what happened last time. So previous natural support was somewhere around, you can see the low in the chart here, low is displayed. So if I keep the crosshair right here, you can say 140.245, and this low today so far is 140.403. So there is hardly a difference of 16 pips between this low and low mid today, and that's why price may not go to 139.52. It may return from here because this is somehow aligning with the previous support area. So these are the two reasons. One is bullish divergence, another one is the previous natural support on the weekly time frame. So that's why it may return to the upside anytime. So what kind of trading we can do? Before we plan our trading position, let's talk about what economic data or economic factors may impact USD JPY. So if we look at the important releases today from the US, uh, there is University of Michigan inflation expectation, which has been revised down by 0.1%, and that has already been priced in. You can see dollar index fell down and it has been falling down since yesterday, uh, ever since the release of PPI. Yesterday, PPI, overall PPI, like if you compare the deviation from forecast, uh, so if you look at the actual releases of PPI and core PPI, and then if you compare this with the revision, because a revision in both, like PPI and core PPI, both were negative. So the overall picture was 0.1, the overall result was 0.1% negative PPI if we look at the revision. So actual releases were greater than forecast, but the revisions were more negative than the previous actual release. So that's why US dollar index started falling since yesterday. And today, besides the release of University of Michigan inflation expectation and University of Michigan consumer sentiment, there are no significant high impact news. And these two are like the inflation expectations. There is no forecast for it. And if I talk about uh, consumer sentiment, there is a forecast. However, this is a medium impact news. So what I'm trying to say is that there is no very high impact news today, and there is no high impact news until Tuesday, when retail sales are going to be released. So we can totally rely on the technical setups, and we can trade our chart and we can try to take the minimum, try to take some pips out of the minimum possible upward retracement swing and get out of the market. So how we're going to plan this? Let's go to 1 hour time frame to understand how we should plan it. So I will show you the first I will show you the magnitude of upward possible retracement. So if we look at the previous retracement, let me zoom a little bit. So this was the previous retracement. So we will count the retracement always from when a new swing low was made. For example, this cannot be counted as a upward retracement because this is not a fresh new swing low in this downtrend. So fresh new swing low, like for example, is this a swing low, this is a swing low, this is a swing low, and then this is a fresh new swing low. So this kind of retracement is a part of this whole movement, you can say, see like this. So if we try to measure the magnitude, this is almost similar. This was slightly smaller if I put the crosshair, and if you look at the horizontal line, almost similar. So this can be the magnitude of the upward retracement if it starts retracing to the upside today. Then you can see the recent retracement was even bigger. What you can see here is the magnitude of upward retracement is getting bigger and bigger. This is another sign that the bears are getting exhausted. So just like we saw there that there was divergence, we can see the divergence even on the 4 hour time frame. You can see that the price has been making lower low, whereas the oscillator has been making higher low. So indicators are just a way to understand the price behavior. So basically it is showing that the bears are getting exhausted. We have bullish divergence on a daily time frame, we have bullish divergence on 4 hour time frame, and then we can see that the magnitude of upward retracement is getting bigger and bigger. For example, if we go here, this was a swing low, and you can see this was a smaller upward retracement. Then you can see there was a bigger upward retracement from here, almost 196.9 pips. Then another retracement was even bigger, 204 point something pips, slightly bigger than the previous one. And then this retracement is even bigger, which is 237.8 pips. So this is also another sign that the bears are getting exhausted, and whenever bulls are coming in the market, they are making a bigger upside swing. So these all are the sign of the upward retracement, and I mean a sign of the probability of another upward retracement today. Now let's talk about how we are going to enter the market and how exactly we are going to set our TP and SL. So I will zoom further to show you the first attempt of the bulls in today's European session. So this was the magnitude of first attempt of the bulls in today's European session, and then market continued to the downside. So we at least want to see a bigger bullish magnitude today to take the buy position. So what we can do, we can simply drag it to the right side, and we want to see USD JPY going above this point. So 141.186. So we can set something, a buy stop around 141.20, and then our risk on this trade will be something around this 86.5, 88 point something, or roughly let's say 90 pips. And if you keep 90 pip reward, the total magnitude of the upward retracement you need is 90 plus 90, that is 180 pips. So your TP will be something around 142.20 or 21 or 22. So this will be your TP. All right, and the total upward retracement of 181 pips is not off the table, because previous retracement to the upside, like I have already shown you, were bigger than this. Those were 190 pips, 200 something pips, 237 pips. So I will not be surprised to see a 180, 185 pips upward retracement. So this is the trading plan for USD JPY, and let's see whether we get this opportunity or not. Thanks for watching.